Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It is Wednesday, August 29th, 2007, and the market's closed, and we pretty much got back almost everything that we lost yesterday. S&P 500 finished with a gain of just under 2%, 1.98 is what I'm showing. It gained $2.85 and did close higher than yesterday's open as well. This morning I made a point of a potential scenario. I wasn't making a bullish call, but I was trying to point out the fact that back in 2005 and 2006, if you look at the blog, I put those charts there, that we'd seen some inverted head and shoulders patterns similar to what we're potentially seeing set up right now. At that point we had, that is in 2005 and 2006, we had rising 200-day moving averages, and we had a market that kept finding some resistance at the 50-day moving average. Once it broke the neckline, that's when very good momentum up moves began in the S&P 500 and in the NASDAQ, just overall. Now, looking at the S&P 500, what we really need to see is for this market to get back up above the highs of this most recent lower high, and that is at 148.33. That would give us a potential target, and this low here is 137. I think this is going to be an aggressive target, but 137, we go straight up to the top of the neckline at 149, and add that to the breakout point. That would give us a price objective about 159, and I think that would take a lot of bears off guard in this market. And you can see that we are along that rising 200-day moving average, and it's a potential scenario. I don't think it comes into play until we see it move back above that level. As I've been saying, you can't get locked into a belief about this market. You've got to be very flexible, especially when we're seeing this type of volatility. Now, I don't think we're going to get an immediate move above this high here, but the market doesn't care what I think. So just be aware that that could be coming. But I think we're going to need to see a little bit more backing and filling in this area. At least I hope so, because that'll kind of create a better base of support to build higher from. But we did see volume increasing compared to on the previous leg of that rally. But it was still lighter than yesterday. I don't think you can really read much into that. Of more importance is if you take a look at the 2-day chart and you take a look at the VWAP, the volume weighted average price, and take this directly across, and you can see it's changing with price. You can see that the average transaction in the S&P 500, the spiders, over the last 2 days was at 145 even. That puts the buyers clearly in control. Don't get caught up on today's volume was lighter than yesterday's volume, because the average volume over the last 2 days is actually right now a lot lower than where we are. If you look at the action from intraday today, you see that this intraday VWAP, the daily VWAP, that's a VWAP moving average I have on there. Once the market broke above that, it began a nice rally on volume, followed by light volume consolidation, another volume rally, and then we saw it drifting down towards that VWAP, sucked some people in short, I think, but it was still in an uptrend. And then once it broke this little downtrend line here intraday today, we saw a very nice series of higher highs and higher lows. Just a classic uptrend in here. And each one of these thrusts higher occurred with heavier volume, followed by lighter volume consolidations. A classic sign of a very healthy market, at least on the 1-minute time frame. When we back it up, you know, we've still got the declining 50-day moving average, but things may be setting up a little bit better in here. Looking at the 10-minute time frame, you can see we got back above that 5-day moving average. I'd still like to see some more backing and filling in this area, but 148.33 is going to be a very important area over the next week or two. You know, don't buy it if it just jumps right up above there. I think you want to see that it gets above there and stays above there. Maybe on a pullback you could front run the potential for this inverted head and shoulders pattern with some call options rather than waiting for the confirmation, because it looks like there's a good chance. If you look at, again, on my blog, I've got those charts from 2005 and 2006. Let's take a look at the semiconductors, because these were the strongest group today. And someone asked, why do I follow the semiconductors so closely instead of the internets? Basically because semiconductors are you need semiconductors to run the internet. You need the semiconductors to run technology, and this has traditionally been a group that leads technology. So that's why I keep my focus on that. Yesterday we had a breakdown in here. Actually, it began 2 days ago. I showed you this trend line, how it was broken, and gotten below that 5-day moving average. Just an incredible recovery here again today, showing again why you have to be flexible in your opinion. Back above that 5-day moving average, back above 37, and actually at 37.30 level as well. I would like to see at this point a pullback maybe towards 37.10. I think that could be bought with a stop underneath this level for very aggressive traders, because we've still got a downtrend evident on the daily time frame. But we could also make the case that this is the inverted head and shoulders pattern here, and maybe to buy some out of the money calls or something like that would be a potential way to trade it. My job's not to give you the actual ideas, but what I'm trying to do here is to show you possibilities of what's occurring in the market. The IWM, again, 80-20 is the key level there, 80-10 to 80-20. And yesterday we saw a sharp breakdown in the IWM. Today we saw it get back up to this prior level of support. So it's looking like the sellers have been trapped in there. If we look at a 2-day VWAP in here, same thing. You take a look at this. That's just a regular trend line. Let me change it back to VWAP. But you look at this right here. Average price over the last 2 days at about 77.30. Something I also wanted to point out on the S&P 500 is the same thing you're seeing here on this IWM, is that on the 2-day, 2-minute chart, you saw a inverted head and shoulders pattern that broke right here, and that's really where the big momentum began, is right here. And if we look at the SPY, you can see that same pattern in here, and it broke about 2 o'clock this afternoon Eastern time. And that's when the buyers really took control of this market. The height of this pattern is 143.50 up to about 145.50. That gives us 2 points from about 145.40, giving us an objective 147.40 on the SPY. So that intraday target falls short of this bigger pattern in here. But again, this is just showing another market fractal. Let's take a look at the Qs. The NASDAQ 100 is getting real close to its neckline in here, and this is really starting to look a lot more encouraging. And again, don't be too concerned about volume, although volume was a little bit heavier today in the Qs, and the Qs did outperform relative to the IWM and the Spider with their 2.8% gain. So it's looking like this inverted head and shoulders pattern is becoming a reality. So if you look at the height of this pattern, 44.5 up to 48.5, add that to the breakout point at about 48.30, that's 4 points. That would give us a price target of 52.30, or is that right? 52.30. So up even higher and in new high territory. Most people aren't expecting it. That's why I think it's a very good possibility. News comes out where at low turning points, emotional turning points, and this big volume is going to be big volume day is going to be very important. Continue to be very important going forward. The Qs broke their uptrend line. We saw that a couple days ago. Now they're back up above that 5-day moving average. I'm hoping we can see a pullback down towards this level right in here, and then a continued rally would be the best case scenario.